It's a big, noisy universe of stocks out there. Welcome to Goodbye or Goodbye. Our goal to help cut through that noise to navigate the best moves for your portfolio. Today we're taking a look at two of the most popular rideshare companies in the world, but with key differences for investors to keep in mind. So what's the best way to play this duo? I'm here with Dan Ives, Wedbush Securities Managing Director and Senior Equity Analyst. Thank you so much for being here. Of course, when we talk about these two companies, we're talking about Uber and Lyft. So let's get to your goodbye, the one that you like here better, and that's Uber here. So the stock has gone up obviously over the past year. That's the chart. So let's get through your case here. You say it's monetizing on rideshare and delivery. Obviously has a bigger business than just rideshare.
Well, it's just starting. I mean, if you look at rideshare, you look at that food delivery business, it's been stable to growing, profitability is increasing. And then ultimately Lyft, that's the little brother, like the little younger brother to Uber. And Uber's just gained more and more share. Peak rides, I believe 2024 is going to be a massive year for Uber, which is why it's our most bullish disruptive tech name in ride sharing.
Okay, so let's get to disruptive tech in a minute, but first I want to dig a little bit more into the cash flow, the profitability, and we've got a chart looking at that. So here's the historic EBITDA, and then here's where the estimates are on a consensus basis. So that's a pretty big jump up.
Look, I think that's how many bears were wrong on Uber, because they were looking at the old Uber. If you look what Dara and team have done, like tacticians, they built a profitable model. You see it in the results. And look, if this continued to go further, it would just show profitability, EBITDA are going to continue to increase. Valuation's compelling. And I believe this is one where the next phase of the Uber story, the growth and profitability, just a phenomenal balance that you just don't get across tech.
And you mentioned it is disruptive tech, which is funny here because I don't actually think of Uber anymore as disruptive tech. What's disruptive about it at this point?
Well, when you look at ride sharing, where everything's going, I mean, I could argue autonomous, the software piece, almost a super app concept similar to what we see in China. Ultimately, I think that's what Musk is going to try to turn X into. You look at Uber, they're just gaining more and more share. And then at the bottom of that mountain, looking uphill, is Lyft, the younger brother. And that's why I think Lyft is a name that's really on the opposite side. Uber, I think this is going to be a trophy case 2024, bull case $80, 67's price target.
What do you think is the next sort of disruptive phase for Uber? Is it autonomy? Is it something else that it's adding to the delivery business? What do you think comes next?
I think it's going to be autonomy. I think autonomous, that's the golden goose, where they're going to ultimately head in terms of looking down the road to maybe partner on the autonomous side, make sure they continue to skate to where the puck's going. Because what they've been able to do from a profitability perspective, narrow. If something's losing money, toss it. But now focus, double down on the areas. And right now, Dara, it's really been almost a Hall of Fame year or two, what he's been able to do at Uber.
All right, and we always talk about the risk for the bull case here. You say macro headwinds. If the economy slows down, people aren't going to be taking as many rides or ordering as much stuff.
But the reality for anyone that's been at airports or hotels the last few weeks, it's been a Pillsbury Doughboy soft landing. So unless you could find me a telescope, kind of hard to find that recession. That's why Uber's bullish right here.
At the same time, Uber rates have been going higher, have they not? Especially in cities where they've had to lift wages. At what point are consumers going to push back against that?
Look, I think they've struck that balance. I mean, if you look, they recognize where they could raise prices. Drivers are so important. They're essentially independent contractors. But it's more and more important to get Uber drivers. That was the issue if you go back over the last year or two. And that's why more and more drivers going toward Uber.
All right, let's talk about your goodbye then. You're one to avoid. Obviously, it's Lyft. We've been alluding to it, as you call it, the little brother here. That stock has not done as well. And let's go through your bear case here. You say it's losing market share to Uber.
By the day. And I think that's been the problem. They're losing ride share from a market share. They're losing the actual drivers, especially peak rides. I mean, that's the key. Long distance, peak rides. That's where Uber's gained share. And for Lyft, the problem is how do you invest? They're trying to cut costs. They're trying to get the profitability. And I think that's why if you looked up disaster in the dictionary, you'd see this ticker.
Ooh, that's a harsh there. And you say it needs to cut even more costs now.
Look, and that's the problem. I mean, they were spending money like a 1980s rock star. and they're needing to cut costs, but that's the problem. The stock's up just to be, you call it speculation M&A, or the stock's cheap.
Right. So,
but again,
okay,
cheap in $3, get you a cup of coffee at Dunkin' Donuts. So I'm not a believer that this is really the one just to own it because it's cheap. M&A, that's the biggest bull case. I think better chance of me playing for Michigan or Washington national championship game than that happening.
Okay, so, but what could go wrong? Well, maybe. If there's an outside chance somebody could come in and buy it.
And again, I'd call that a very, very small chance. I don't like making that speculative bets. I'd rather own Uber. I could sleep well at night owning Uber. If I own Lyft, 3 a.m., I'm waking up.
We don't want you waking up, Dan.
Exactly.
All right, well, let's run through this here and kind of give a summary of what you've told investors here. You say here that basically people should buy Uber. They're monetizing that installed base. They're building out eventually this sort of super app concept, if you will. On the flip side, Lyft is little brother. It's just not making money. It needs to cut costs further, and it's not going to be bought.
And you go back a year ago, New York City cab driver was bearish on Uber. Look at the stock, the performance it had. This is just the start.
So is that the counter indicator, the New York City cab driver?
New York City cab, and right now New York City cab driver bearish on tech the last few days, and that's bullish.
All right, Dan Ives, thank you so
Thanks
much.
for having me.
Really appreciate it.